Hey there, and welcome to my channel, the Paper Bag Investor. Today's video, I want to look at Lemonade and ask, is Lemonade a company with great qualities that make it a 10x company for your portfolio? Or is it just a hyped up startup? In this video, we'll answer that question so you can better know if Lemonade should be in your portfolio or not. Make sure you stick around to the end of the video as I'll be showing you exactly what I am doing with Lemonade stock these days. So let's get into it. Before I go any further, just want to make it absolutely clear, I am not a personal financial advisor, just a guy with a paper bag on his head who loves investing and thinking about the future. If you love investing, you love thinking about the future as well, I encourage you to hit that subscribe button down below and follow along with my channel as it grows. I've been investing since about 2008. I look for long-term, high-growth opportunities, and using this kind of strategy, I've been able to average about a 30% compound annual growth rate since 2008. And I hope to continue to do that for the next 10 years, 12 years, 20 years beyond. And I want to help you guys hopefully achieve those kind of returns as well. So if you get value out of this video, I encourage you hit that subscribe button. Okay, so today's video though, we're looking at Lemonade, and I have a list of qualitative questions that I ask when I'm looking for a great growth company. So we're going to run through each of these questions and examine Lemonade to see how it holds up. The questions are, number one, why is the product superior to other products in the category? Number two, does the product address a large and growing market? 3, does the company have world-class execution and innovation? 4, does the company have a clear and probable path to a 10x valuation in the next 5 to 10 years? 5, is the CEO and other management an owner-operator with skin in the game? Also, is it founder-led? And finally, number 6, does the company's value grow with a network effect, and to what degree? So let's dive into these questions and look at Lemonade from each one of them. So number 1 is the product. Why is the product superior to other products in this category? Okay, so their products, first off, what I really love about their products is that they seem genuinely customer focused. Best way to evaluate this quickly is to look at customer reviews for the product versus other insurance products and other insurers. From Clear Insurance, they rank very highly in all categories, but actually number 1 in the USA in renters insurance and home insurance. And there's a little post about this from Clear Insurance, and where they were number 1 home insurance, number 1 renters insurance, and I think this was based on, I think it was 50% for the price, 25% rating, just overall satisfaction from the customer, and 25% for on how high they rank in terms of would they recommend this service to others. So for those 3 metrics, they come out on top in these 2 categories that they're in the USA. Also, why is their product superior? They really strive to make this customer experience. They say they want to delight the customer. And one of the ways they do that is they want to make the whole process very, very quick. They say it takes about 90 seconds to get insured. 90 seconds, you can get your whole insurance done deal. And if you have to make a claim, you say 3 minutes, you can get your whole claim done, set up. And oftentimes, if it's processed by one of their AI bots and systems, you get paid all within those 3 minutes. It's interesting, they take 90 seconds or 1.5 minutes. Geico, they talks about doing 15 minutes to save you 15% on insurance. They're talking 1.5 minutes, so they've kind of done that 90% reduction in time, and they're trying to make it that much easier and simpler and just smooth to use as a consumer. Also, they have built into their, as far as I know, they're the only insurance company that's done this. They have what they call the Lemonade Give Back, where a portion of all the money they bring in through their insurance premiums, a portion of that, what's left over after premiums are paid out, after the chunk they take as a company, gets given back to charities of your choice as a consumer. So I think long term, that's a really brilliant strategy to help create a more a healthier relationship and a sort of triangular relationship between you, your insurance company, and the charity of your choosing. So if you and really their strategy for this is they hope that this makes you happier to choose them as your insurer, but also makes you as a person more honest with your insurance company, with them. One other thing what makes them really customer-centric is their insurance policies. They want to be easy to read and understand. So it's very clear for you to know as a consumer what you're getting and what you're not getting. And all these things stack up to, in my mind, being a very superior product to other insurance products that are out there. So for me, I give this, for question number 1, this gets a huge check mark. Yeah, really, really well done. Question 2, does the product address a large and growing market? So yes, the short answer is yes, definitely it does. The insurance market is a huge industry, about a $6 trillion industry, and it's only going to become larger as the whole world becomes wealthier and wealthier, and the population of the world grows and grows. You basically have people's lives and people's wealth that you're protecting with insurance. So it's a huge industry that's only going to continue to grow. And I think a demand for more 21st century insurance product will become more and more desired and expected as younger people buy larger and larger insurance products. So again, I think it's going to be a growing market and lots of demand for insurance, especially if you have a product that's really 21st century based. Okay, does the company have world-class execution and innovation? So Daniel Schreiber and Shai Wininger, in my mind, they're two of the sharpest leaders and best communicators I have ever seen. Every detail on their main website, their app, on the investor relations page, it's creatively, clearly, and simply communicated. I mean, every little detail is just nailed. For example, one random little example, but their investor relations lemonade story video and founders letter, it actually follows a kind of biblical narrative of the Garden of Eden, the fall, and then finally the redemption, this sort of metaphoric, it's sort of woven into the structure of how that video and letter are set up. And they do that by saying insurance was meant to be good, is this product meant for the good of all, but it's sort of fundamentally flawed between the relationship between the insurance companies and the public and the consumer at large. But Lemonade, they come in with this sort of the redemption side, because Lemonade can restore the good by creating a new branch of insurance that rebuilds customer trust. Like you read, I read lots of investor presentations and letters and go through them, and some of them, they just look like boring, generic PowerPoint slides that some guy put together. What you're seeing with Lemonade and the detail and sort of nuance that they communicate is on a whole nother level, and in my mind shows the sharpness of these two guys, thinking that these two guys are very, very brilliant executives that we have founded the company and are leading the company. And if you've seen that video or that letter, it's just kind of an image of what they look like on their investor relations page. I encourage you to check that video out and that letter out. Further on to point number 3, their strategic thinking is very sharp and it makes sense, which is also a nice bonus. What is their strategy, you ask? You're talking about their innovation, their execution, and their overall strategy. It's really to make a seamless app that can capture as much data as possible and can be also continuously improved, and then use this efficient structure to get into unloved insurance products that young people use, like renter's insurance or pet insurance. These products are kind of unloved because they're not big earners on the, they're not making a ton of money for insurance companies because you're not paying a lot for renter's insurance or pet insurance. But Lemonade can do very, very well in these areas because they have a lower base cost structure, because they're much more efficient. They essentially undercut what the sort of base level of larger insurance companies would need to charge. So they can undercut these other companies, get in there, and really attract these young people that are buying these kinds of insurance products. Then they want to grow their user base as fast as possible, basically spread out across the globe as much as they can and grow like crazy, and then expand into, from there, they expand into more lucrative products as the user base gets older. That's kind of demonstrated right now. They're just very, very recently introduced life insurance. And then they, of course, through all of this, they want to continuously improve the underwriting models with data as the amount of data grows. So that's kind of their whole strategy. And to me, it's super, super brilliant. And they're executing towards this goal with an app and product that is loved by customers, as we talked about there, loved by customers. And they're growing rapidly, and they reached 1 million customers in record time. So it's kind of a chart that shows some different insurance companies, how quickly they reached 1 million customers. They're obviously much faster than everybody else. So in my mind, do they have world-class execution innovation? Yes. Big green check mark, definitely do. Very, very positive. Okay, we'll move on to question number 4. Does the company have a clear and probable path to a 10x valuation in the next 5 to 10 years? Yes, they do. I really think they do. They're about $8 billion company now, so 10x, you're talking like an $80-ish billion company in 5 to 10 years. I think that's definitely possible. Obviously, nothing is guaranteed, but I laid out a case for this and some of the numbers for this in a video, which I will link down below in the description. And there is the thumbnail for that video as well. Saying maybe can they 10x, in the next 5 years or so. So again, I'd say big green check mark, definitely could have that kind of massive growth. Number 5, is the CEO and other management an owner-operator with skin in his game? Is it founder-led? Yes and yes. So yes to both accounts there. And both co-founders are integral to the company, hold large positions in the company. And they both co-founders hold about 5 to 10% of the company each. Say 5 to 10% because there's a portion of SoftBank shares. I'm not exactly sure how much each one of them holds. But research shows that companies that are led by founders and that have large equity stake in the company, they tend to outperform the rest of the market. That's why this question is so important. And all 4 companies, I only own 4 companies, but all 4 companies I own have a founder-type leader who has a large stake in the company. And so this is a very, very important question. It intuitively makes sense. If you have someone leading the day-to-day operations, who has a lot to gain by this company performing well, that's a good sign for your investment, right? And as an investor, that can really help you sleep well at night, knowing you have this person looking after your investment. So big green check mark once again for number 5. Number 6, the last question we're going to look at is, does the company's value grow with a network effect, and to what degree? So what do I mean by network effect? Network effect is where the value of something grows exponentially as the network grows. So a good example is Facebook. If you're the only person on Facebook, you're one person on there, Facebook's completely useless. But if once, half your friends are on Facebook, it's quite a bit more useful. But then once all your friends are on Facebook, it's suddenly very, very useful because you can connect with all your friends and acquaintances and communicate with them, share pictures, etc., etc. Suddenly, it's this network effect. As the more and more people that are on there, the more and more people in that network are there, and the more and more useful it is. Exponentially grows in value. Also exponentially grows in dominance. It's very hard for somebody else to make a competitive Facebook because you have this powerful network effect in place. Also, another example that's a little bit different, but it's similar, is Google search. We don't network peer-to-peer in that sense, back and forth from one person to the other, like our friend group, like we would do on Facebook. But Google search still benefits from the network effect because they're the most dominant search. It means pretty much everyone uses Google, and because we're all using Google, we funnel our data through Google and their search. It ultimately means they can have the best search algorithms day by day, constantly making the algorithms slightly better, which causes us all to continue to just rely on and use Google. So it's kind of a reinforcing flywheel that makes it better and more dominant in its place as the number one search. So those are some examples. Now for Lemonade, their network effect could manifest itself as it grows. If it grows very aggressively, and if they can harness the increased data from growing aggressively and from their seamless software structure to make better risk models. So that's kind of the big question. Can they somehow make better risk models if they grow fast enough, have enough data? Can this sort of flywheel just take off for Lemonade? Do they get better and better risk analysis and better, of course, product then for their users, which which means more and more growth and more data? This is kind of the holy grail for Lemonade and could turn them into a monster company. I did a video where I kind of laid out my whole sort of Lemonade thesis. And like I said in that video, they have the potential to 100x. And this is what it'd be all about. This network effect just exploding sort of off the charts and massive growth. Then they could have, 100x example, and they would be like the Amazon, the Google, the Facebook of insurance. They'd be like an $800 billion company plus, kind of in that range. Certainly, I think a possible outcome. It certainly is a possible outcome. Okay, so I'm giving this one, though, a red check mark. Yes, it's very positive, certainly a positive outcome, but I don't know enough. I don't know with enough certainty that this network effect will really come true or not, whether they can really grow that aggressively or not, or whether regulations will restrict them. So I'm giving it a kind of a red X, a red check mark, saying, yes, this is really good, and there's positive signs, but we don't know with absolute certainty. But the positive signs that are there are very, very positive. Like the possible outcome is very good. That's what I'm talking about. There's not very many companies you can buy, and you can genuinely say this company has a potential to 100x. But I think Lemonade still could be one of those companies. Okay, so what am I doing with the stock in this case? Remember, this is not investment advice, but you're wondering, what the heck? Hey, guy in the paper bag, what do you think? What are you doing? What's the bottom line? Bottom line is I am accumulating shares. I am buying shares. Lemonade, as it goes down, dips down to like the 140s like it was. Bought some more shares, and I am accumulating shares. Even right now where it's at, I forget where it ended today. Well, we're at like 150s. I would still be buying a little bit. It's not like it's a huge amount of my portfolio, but I am accumulating shares. And because after Tesla, this is the company I am most excited about and really believe could do amazingly well. There's still major risks, though. I want to emphasize this. And there's still major risks I see, but I see it sort of as an asymmetric risk-reward ratio. So there's some risks that could go very poorly, but also there's upside that it could do all right or even extraordinarily well. That 100x scenario. And again, I just want to say, the range of outcomes is it's either this overpriced insurance startup that fizzles out, or it becomes the Amazon, the Facebook, the Google kind of equivalent of insurance, or it lands somewhere in between, which would also be an okay outcome as an investor. So in my mind, the sort of possible downside versus the sort of probability of one of these upsides, either somewhere in between or the sort of the holy grail where they become this massive company, that's worth the risk and a reason why I'm making sure I have Lemonade in my portfolio and a pretty good amount of it. So that's my presentation. I'd love to hear what you guys think about Lemonade stock, what you think about my growth questions. Are there any other questions for evaluating a growth company that you think should be in my list? Let me know in the comments down below. Of course, these are just sort of qualitative questions. There'd be quantitative questions where you can look at their revenue that's growing. You could look at their number of customers that are growing and make sure those are growing exponentially. Those are sort of separate questions. But I'd love to hear what you guys thought of this video. If you got value out of it, make sure you subscribe. Make sure you share it with somebody else who's interested in Lemonade who might get value out of this as well. And hit that thumbs up. Hit that like button. It really helps the YouTube algorithms, helps my channel grow. So I will see you in my next video. Thank you guys for watching.